If you are planning on buying a new build house here in the UK as a first-time buyer, it is important that you are aware of the financial obligations that comes with it. Because knowing the financial obligation involved will help you prepare better for this significant commitment you are about to make. So with that said, in this video, I will discuss the cost you might encounter as a first-time buyer when buying a new build house here in the UK with a mortgage. Please know that I'm not a mortgage broker, a solicitor, or a real estate agent, so whatever I say in this video should not be considered an advice and it should not substitute for your due diligence research. Just consider this video as my own opinion. So with that said, let's kick things off with the biggest financial obligation you should put in mind when you're buying a new build house in the UK as a first-time buyer, which is the purchase price. Now, the cost of a house here in the UK will vary depending on factors like if it's a new house or an old house, location, size, and the local property market. For instance, the average housing price in cities like London is higher than other regions here in the UK. Also, a detached house is likely to be more expensive than a semi-detached house, and a semi-detached house is more likely to be more expensive than a terrace house in the location you are planning to buy your house in. So for those of you who don't know what this means, a detached house is a standalone house. A semi-detached house is when two houses join together. A terrace house here in the UK is when 3 or more houses are joined together. So if you're a first-time buyer planning to buy a house or a new build house here in the UK, researching the current market trend and setting a realistic budget is critical. Now, in January 2024, the average house price here in the UK was about £282,000. Now, if you're planning to buy a house here in the UK, you should be having maybe plus or minus that depending on your location. Like I said earlier in this video, the location where you want to buy your house will determine how much your house will cost. Now, a detached house in central London can cost maybe £1 million. Yes, houses cost over £1 million in central London, while the same house in central London can be in central Manchester, which is still both in the city center or close to the city center, and that same size of house can cost half of that cost it costs in London. So you need to put that in mind. Now, on this channel, I do have a video where I talk about how to calculate your affordability for a particular house if you're buying a house with a mortgage. So if you're buying a house with a mortgage, that is if you're borrowing the money from a bank to buy the house and then you're making monthly mortgage repayments back to your bank, there's a way they calculate your affordability. I will link that video to this video so you can go watch it and set a realistic budget based on your income if you are buying a house with a mortgage here in the UK, so you can know how much you can borrow from the bank and you can do all those calculations and figure it out. Now, if you're not buying a house with a mortgage here in the UK, let's say you have your cash, you have like £400,000 or £300,000, you do not need to worry about the purchase price or trying to calculate your affordability and things like that, because you can just carry your lump sum money and go to your buyer and get a solicitor and do your transaction and pay the money. You don't need to go through a bank or a mortgage broker and all of that. Moving on, the second cost you would have to think about if you're buying a new build house here in the UK with a mortgage as a first-time buyer would be your deposit. Now, in the UK, people who are buying a house with a mortgage will typically provide a deposit, and the deposit is usually a percentage of the house purchase price. Now, the standard deposit is around 10% of the property's value, but putting down a higher deposit can help you secure a better mortgage deal. So here in the UK, if you're buying a house and you have a 10% deposit, the interest rate you would get on that mortgage will be different from someone who has about 50% deposit, because the higher money you put down, the lower the interest rate you would be paying because you're borrowing less money. So you see, here in the UK, if you are putting a lower percentage deposit and you're borrowing the rest from the bank, you would actually have to pay a higher interest rate on the money you're borrowing because you're borrowing more money and that's more risk for the bank. But if you are putting down a higher deposit, so let's say you're putting down like 50%, 60%, 40%, you would actually get a more competitive, that's low interest rate on the money you're borrowing from the bank, because that's a lower risk for the bank to take, because they are borrowing about 50%, 60% of the money you need to buy your house, than if they are borrowing somebody 90% of the money they need to buy their house. Currently, here in the UK, you can actually get a mortgage with a 5% deposit. But if you're an expat living here in the UK on a visa, you might not be able to secure a mortgage with a 5% deposit. So something you want to put in mind is that your deposit is very important when you're buying a house here in the UK with a mortgage. Regarding deposits, if you want to save for a house deposit or you want to know how we save for a house deposit, you can watch my video on how to save for a house deposit as a first-time buyer. It will give you some great saving insights to help you save for your own deposits. Now, the third financial obligation you have to consider when buying a new build property here in the UK is your reservation fee. Now, reservation fee is a payment made by a prospective buyer to reserve a property before the final exchange of contract. It is just a gesture sellers require buyers to make to show their commitment to purchasing a property. So here in the UK, the reservation fee can vary, but it is typically around £500 to £1,000 if you are buying a new build. Now, you have to keep it in mind that this reservation fee is separate from your deposit. However, the reservation fee will be deducted when you pay for your deposit. It is just a show of commitment so that they can take the house off market. You can try to put your document together. Your solicitor and the seller solicitor will start to make conversation, and just before you start to exchange contracts. So immediately you exchange contract, then you pay your deposit. So let's say your deposit is like £10,000, and let's say your reservation fee was £1,000. When you are paying your deposit, you will pay £9,000 because you had already paid £1,000 your reservation fee. So that's what I mean. Now, one important question you should always ask here in the UK when you're buying a house and you have to pay a reservation fee is that, is your reservation fee refundable? Now, in many cases, the answer is yes, but it depends on the circumstances. So let's say you visit a development and the salespeople tell you about all the plot they have, the kind of houses they have and all of that, and you see a plot and a house that you like and you want to make a reservation of that plot because you're going to buy the house. So what you do is that they'll take money off you. When they take the money off you, they'll remove the property off the market. Now, from the day you make the payment, you have 14 days cooling period. Now, within that 14 days, if you say, I'm no longer buying again, I changed my mind, I don't want to buy this house again, they'll give you a reservation fee. But in most cases, after that 14 days, you have to forfeit the reservation fee. Most developers will not give you back your reservation fee. Now, another reason why you can get your reservation fee back is that if the sale does not fall through due to issues on the seller's end, or certain conditions outlined in the reservation agreement are not met and it had nothing to do with you, then you'll be entitled to a refund. However, it is crucial to carefully review the terms and conditions before making a payment when you're reserving a property, because if the house sale does not fall through due to issues on your end, that is you the buyer, due to issues on your end, your reservation fee will not be refunded. So this is something you need to keep in mind. Now, the fourth cost you need to keep in mind is stamp duty. Now, stamp duty is a tax imposed on house buyers here in the UK when they are purchasing a house. And the amount you will pay will depend on the purchase price and the property's location. Now, depending on the house you're buying or the location where your house is, stamp duty can be very expensive. So considering this into your budget is very important. However, exemptions and discounts are available for first-time buyer buying specific property value. So in England and Northern Ireland, first-time buyers are exempted from stamp duty on properties up to £425,000. So you won't pay stamp duty if you're buying a house that costs maybe £300,000 and you're a first-time buyer in Northern Ireland and in England. So you have to put that in mind. So the fifth fee would be your legal fees. Now, you will need to hire a solicitor to handle the legal aspect of purchasing your property, from searches to contract review. Your solicitor will do all of this for you. Now, this professional services does not come cheap. It comes with a fee, and obtaining a quote to understand the cost before you even go with any solicitor is very important, so that you can budget properly and have a good overview of how much your legal fees will cost you. When we hired a solicitor, we paid over £2,000 in solicitor fees and in searches. So searches are like, they will do search on your land to see if there's anything on the land that might cause issues for that line, if that place is a flood area, things like that. That's what they would do for you. That's what they call searches. Now, the sixth financial obligation you would have to consider would be snag survey fee. Now, paying for a surveyor to do a snag survey for your house is not necessary. But we actually hired a snag surveyor to do a snag on our house because we are first-time buyers and we are also experts here in the UK, in the sense that we're not born and bred here in the UK. We are living here in the UK on a visa. We've just been living in the UK for some couple of years, and we've lived in different kind of houses, but we've not lived in the kind of our house we bought. So we really did not know what to look out for, what would have been done right, what would have been done wrong. We didn't know what to look out for. So it just had a peace of mind because we're buying such an expensive thing as a first-time buyer, and we didn't know what to look out for. It was just better for us to get someone who was an expert to come do it for us and tell us, okay, your house is in good shape, you know. But to be fair, if you're buying a second house, so let's say we're leaving this house and we're buying a second house, or if we buy an investment property and the investment property is a new build, we know what to look out for now, because when our snag surveyor was doing the snag survey, we were with him all the way, so we know what to look out for now. So to be fair, for us to buy an investment property or a second home, we won't hire a snag surveyor. But yeah, that is just that. So basically, the snag survey would be done after you collect the keys to your new house. You can't do it before you collect the keys to your new house. But don't worry about the fact I said it can only be done after you collect the keys to your new house, because I know you might be wondering, what if I now see something that I don't like or something that is bad? How will I say I don't want the house back and all of that? No, not to worry. If you collect the keys to your new house, you can contact a surveyor to do a snag inspection to spot problems with your new build house. So when the snag surveyor is doing the snag survey, they would always find issues. The issues might be small, it might be significant, it might be cosmetic, it might be structural. They would always find issues. So after they've done the snag, they'll give you a document of everything they found. You just send it to your builder, and then your builder would come and fix everything. So the developer will come back and fix everything. So in the UK, if you're buying a new build, your developer has a 2 years commitment to you. So more like you have 2 years warranty on the property, where if there are any issues with the house caused by the developer or the developer did not do it well, they would come back and fix it. So you don't need to worry. They would technically not find structural damages, but they would always find small or cosmetic, even a little bit of significant damage. Because when we snagged our house, we actually found some issues here and there, but it was nothing significant. It was nothing that would cause us to panic, because to be fair, they actually built our house. Our site manager actually made a joke with us when we showed him our snag survey, because when we were buying our house, we bought our house where it was still on foundation level, so we saw the house every step of the way. And anytime we saw the house, we would come, we would pray on it, we wrote Bible verses everywhere. Like, we were always coming to see the house, always coming to pray, because we just trusted God every step of the way, because it was a huge financial commitment. So we wanted to be sure that God was with us in this. We know it was the Alpha and it was the Omega. So our site manager made a joke when we gave him the document, and he was like, your house seems to be built really quite well. I guess it was because of all the prayers you guys did when you came to see the property, and my husband and I just smelled. So anyway, a snag survey is a visual survey to check the quality of the workmanship against applicable standards. Now, this service can actually be expensive, but knowing that you have an excellent house is crucial, because some developers can be very funny. We paid over £500 to do that, and to be honest, it gave us peace of mind. I mean, it was worth it. I would say snag survey is a 50-50 thing. You can do it or you cannot do it. It's not compulsory, to be fair. Now, the seventh financial obligation you would have to make when you're buying a house, or cost you would have to think about, is the cost to hire a mortgage broker, or the fee you have to pay when you secure a mortgage. Now, for those of you who don't know who a mortgage broker is a a person or a company that can arrange a mortgage between you, the borrower, and the mortgage lender, aka the banks or building society. Now, in the UK, you can get the services of a mortgage broker for free. However, some mortgage broker will charge you a fee. Now, when we bought our house, we went with the mortgage broker our developer suggested, and his fees were for free. However, the lenders, aka the banks or building society, may charge arrangement and application fee when securing a mortgage. This cost can also add up, so compare offers and choose a mortgage that suits your budget. Now, when we were buying our house, obviously we bought our house on a mortgage. We went with a mortgage product with a mortgage fee of £999 pounds, so almost £1,000, and we had to pay it. Now, speaking of mortgages, if you're curious about how the mortgage process here in the UK is like, you can watch my video on the UK mortgage process, an essential document needed for first-time buyers. It will give you a whole lot of insight on how the UK mortgage process is based on our mortgage process. Now, another fees you might have to consider when buying a house here in the UK is the moving fees. Now, relocating to a new place is never cheap, and the expenses associated with moving can quickly add up. So when you're budgeting for your moving expenses, you have to factor in costs like hiring a removal company or hiring a van and purchasing parking materials to transport your belongings to your new house. So the ninth financial obligation you might want to consider is your recurring expenses. Now, because you're moving to a new house does not mean that you won't have recurring expenses like utility expenses. So it is important to remember to account for these recurring expenses such as paying for gas, electricity, water, internet, as well as ongoing costs like council tax. And you have to account for your monthly mortgage repayments, because remember, you have to pay the bank every month. You need to remember that you took out a mortgage from a lender and you have to repay that mortgage. And in most cases, your mortgage might even be more expensive than your rent, or it might be less than your rent. So it just depends. So because you're now a house owner does not mean that you will not have recurring expenses for the house. You would. In short, owning a house does not exempt you from these bills. In short, your bills might increase because you must consider house repairs and maintenance costs, as you are now your own landlord. So if anything happens to the house, there's nobody to call. You call yourself. And you hire somebody to help you fix it and things like that. Likewise, you need to consider things like home insurance. Is necessary. You must factor in the cost of building and content insurance. Some mortgage agreements requires you to have home insurance in place to protect the mortgage lender indirectly or the borrower in case unforeseen incident happen to the house and the house is no longer livable, or the house is damaged and that's the end of the house, or the house burns down. Something terrible just happens to the house and you can't live in the house anymore. It doesn't make sense that you have to look for a new place to live in. You'll be paying rent there, or you bought a new house, you'll be paying mortgage there, and you still be paying mortgage for the house that does not exist anymore. So it's always smart for you to take out a home insurance just to give you that financial protection if anything happens to the house. If anything happens to the house that you bought with a mortgage and it's not your fault, you had nothing to do with it, it just happened, like maybe natural disaster or anything just happened to the house and you can't live in the house anymore, the home insurer would pay out the lender, like the person you collected money from the home insurance, to pay them out. So that's why most mortgage agreements or contracts would require you to have a mortgage insurance in place, so that it protects the lender indirectly to the money they gave you, so that the money they gave you will not just go into the drain if something happens to the house. I hope this makes sense. Another recurring expenses to consider is like estate charge or service charge. You have to consider it when buying a new house. So if you're buying a new property, if you're buying a house in a new development, they might ask you, like developer might ask you to be paying estate charges or service charge, things like that. They might ask you to pay that, because I remember when we moved to the estate we live in, I think we have to pay like £16 or so, and that was because we had 1 month left in the year. But I think moving forward we're paying like £100. I can't even remember, but yeah, you have to pay estate fees. Now, the 10th financial obligation you need to consider will be furniture and decor. When moving to a new house, you might need to purchase new furniture or decor item, which the cost of these things can quickly add up. Likewise, some new builds in the UK do not come with flooring. So if you buy a house, they will not do the flooring for you. Just be bare floor, like sandy floor, not like sandy floor, but maybe like cement floor or something. So you also have to consider the cost of flooring your house, so that you should not move to a floorless house. I used to say that too, but it sounds weird. Yeah, so you need to consider it. So that's what you also need to consider under decor and furniture. So it doesn't mean like, okay, you have to start buying couch and all these things. Like essential things like flooring, rug upstairs and things like that, you might need to do it ASAP, because most times it doesn't come with the house and you need to do it. That is why it is vital that when you're buying a house, you should budget beyond the sales price if you're buying in cash, or you should budget beyond your deposit if you're buying with a mortgage. So that means if you're putting a deposit down and then you're borrowing the money from the bank to pay the house developer or wherever you're buying the house or wherever you're buying the house from. That's why it is very important to budget beyond your purchase price or your deposit. Now, when we moved into our house, we paid over £9,500 in flooring cost alone. Now, when it comes to flooring your house, the developer might give you an option of flooring the house for you at an additional cost. But in most cases, the cost for flooring the house with the developer is usually higher than if you get an independent contractor. When we're buying our house, that was the case. I think St. Modern was quoting us about £16,000 to floor our house for us to the standard we wanted, and there was something they could not even do that we wanted. Like, for instance, we wanted the staircase to be painted white and have a stair runner, which we ended up doing ourselves, doing DIY. I'll put a picture for you guys to see. But yeah, so little things like that, our developer could not do it for us, and they were charging us £16,000. And we went with a flooring of our choice. They did it how we wanted it to look like, the color, the materials we wanted, and it was cheaper than what St. Modern was quoting us. Like, it was about, I think, 6,000, 7,000 cheaper than what St. Modern was quoting us. So yeah, that's something to put in mind. Now, since I shared that we bought a house in the UK and I did an empty house tour video of how our house looks like, a lot of people have been asking me, oh, where do you guys buy your house from? Where's the location of your house? Who is the developer? Blah, 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 blah. Now, our developer is St. Modern Homes. Yes, that's our developer. And when I even did the house tour, when I opened the door of the house, St. Modern banner was on it. So I wonder why people keep asking me who is our developer. When even as I opened the door, you could see the name of our developer there. Now, people ask for the location of the house. Obviously, I can't tell you the location of the house because it's like me telling you my address. How will you people ask for that kind of question? But basically, all I can say is the house is located in the Midlands, and we live in the Midlands now. We no longer live in Manchester. A lot of people still reach out to me about things in Manchester. And yeah, never put it out there now. We live in the Midlands, but please do not ask me where my house is located because I'm not going to tell you. It's like you asking me for your address, and I can't put my address on the internet. It's funny, but it's not funny. And yeah, I no longer live in Manchester. So in case you reach out to me asking about one or two help around Manchester, I can't help you with that because I no longer live in the city. I live in a different city now. Now, the last but not the least cost or your financial obligation you need to consider when you're buying a new build house here in the UK with a mortgage as a first-time buyer is the miscellaneous. So miscellaneous can be things like travel costs to visit the development, and monitor the progress of the house can add up, especially if the new house you're buying is in a different city from the city you live in currently. Like I said, when we bought our house, we were living in Manchester and we always had to come to the Midlands to come and look at the house and, you know, just have a look, progress and everything. Like, I was very happy we even did that because there were some things we saw when we were building our house with that we didn't want, and we pointed it out. For instance, our garden, the slope that would have been on our garden, only God would have helped us. So when we came to visit the property and we saw the garden, and they told us, oh, the way our neighbors, and I told us that the way our neighbor's garden looks like, that's how our garden would also look like. And there was a massive slope in our neighbor's garden. We had told them that, nope, we don't want that. And developer tried their best to help us, you know, sand fill it well so that we don't have a slope. Even though it wasn't expert flat ground, but it was better than having the slope. They even told us that the slope would not be visible. When we got there, the slope was very visible to the housing developers. When we got there, the slope was very visible to the eyes. And they said it was not visible to the eyes, it was very visible to the eyes. So these developers, you need to be careful. You need to do your due diligence when you're buying your house. That's why it's important to visit occasionally. And some developers don't always have these issues. Some do. To be honest, in this UK, I've not seen a perfect developer. I have not. There's always one issue or the other, which is normal. Now, you also have to consider feeding and hotel costs if you're sleeping over. Like in our case, we never had a reason to sleep over. We would go in the morning and in the evening we're back. We just take the train and we take Uber and stuff like that. But when we came to sightsee to, you know, get more updates about the progress of our house and see the house and stuff like that, we would always have lunch after that. We'll just go to a restaurant and have lunch. So all those costs, you know, can add up. So there you have it, guys. I've tried to break down all the costs associated with buying a new build house here in the UK with a mortgage as a first-time buyer. So I hope this gives you an idea of your financial obligation when it comes to like buying a house here in the UK.